Hey folks, what's going on? Welcome to today's video. So in today's video, I wanted to discuss with you trading performance, measuring your performance, and giving yourself a baseline level of performance that's required for you to be continuing to trade your method with real money. And it's just an idea or a concept that I've been thinking about, but I think that it could be a good way to prevent yourself from losing too much money when it's clear that your strategy is not working, but you just won't admit it. You can use a mechanical formula to tell you if your trading performance is where it should be, all right? So the way you do this is very simple. You need to know a couple of things to start. All right, guys, before we start, make sure to hit the like button, subscribe to the YouTube channel if you enjoy this type of content. So let's get to it here. This is mainly applying to traders who execute a lot of trades. So scalpers, essentially. Short-term trading is where you will be executing a lot of trades in a short amount of time. The two things you essentially need to measure your performance is, number one, your winning rate, which means how many out of your total trades were winners and how many were losers. And the second thing is basically how much are you winning on your winners and how much are you losing on your losers. So if you try and do a Google search for approximate winning percentage of traders, you're going to find articles talking about 90% of traders lose money. Yes, we already know that. But what we're concerned with is the profitable traders, the traders who are making money every day. What is their approximate win rate? What's the average win rate of a profitable trader? I heard that it's between 60 and 70%. So let's use that as a baseline for our trading. Now, in regards to scalping, if you have a method that you've been trading, you should probably know what your win rate is already. And for me, it's been sitting around the 60 to 70% mark for a while. And that's quite good. So we're going to use that 60 to 70% win rate as a baseline for how we're going to measure our trading performance. Next thing we need to know is, on our losers, how much do we lose? And on our winners, how much do we win? And what is the lowest amount we can win before the trade starts to have a negative expected return? All right, so this is the type of stuff we're talking about here. So I'll give you an example in an Excel document. This is the basic equation, and this is an equation that poker players and gamblers use to measure their expected return. It's basically the amount won times the percentage of winning minus the amount lost times the percentage of losing. So in this case, I've created a scenario that says you win $10 70% of the time and you lose $20 30% of the time. And this equation equals 1, meaning that if you have a stop loss of $20 on a trade and your profit target is $10 and your win rate is consistently 70%, then you will have an expected return of $1 per trade, which is basically right above break even. If you're risking $20 a trade, the minimum you're going to be able to accept as a profit is $10 if your win rate is consistently 70%. And notice that if I lower the win rate now, if I lower it to 60%, clearly see how this strategy easily goes into the red. So this is like borderline right here. And this is very important for you to know. So you need to know, for whatever your strategy is, if you're risking X amount of ticks on your trade, you need to know over time, if you take that trade over and over and over again, what is the lowest profit that you can accept in that trade for your strategy to work out long term with at least a break-even return. Obviously, most of you know that in trading you should look for good risk to reward opportunities. You know, sometimes in trading you don't always have that. Sometimes you need to do a 1 for a 1, or even sometimes you can accept a smaller profit than your risk. It depends. And it's going to depend on the winning percentage too. If you're experienced at scalping and reading the tape, you can find opportunities that are 80% probability of profit, but the amount of ticks you get with that 80%, you can say there's an 80% probability that the price is going to go lower here because of what just happened, X, Y, and Z, but you don't necessarily know what the amount of profit is going to be. So that's why you have to always take comfortable partials here. So this is an example of measuring your expected return and knowing what kind of performance is required on your degree in order to remain profitable over time. Now, the next thing that I want to focus on is creating a rule set for when you are clearly not performing at the degree that you set for yourself. So let's say, as a scalper, you need to maintain a win rate of 70%, which means 3 out of 5 trades are winners. 4 out of 6 trades are winners. So if you take 6 trades and 4 of them are losers, you're not up to par with that win rate, which means that over time, you're not going to be making money unless your winners are double the size of your losers. And again, that's why it depends on your system. In the case of the example I gave here, this trader needs to maintain a win rate of about 70%. So if his win rate is below 70%, then it can be said that he is not performing at the level he is expected to. Therefore, he should switch over to his demo account for 2 to 3 trades. And again, this is something I'm going to be applying. All of this is pretty subjective because nobody trades the same way. I'm not saying you should trade like this, but this is sort of based on the way I trade. If you take 6 trades, 4 of them are winners, fine, you're good, keep going. If you take 8 trades and 6 of them are losers and 2 of them are winners, there's something wrong and you need to hit your demo account for 3 to 5 trades, I would say, and then take it from there. You always want to be striving for that baseline that you set for yourself. So in this case, the win rate that I'm striving for is approximately 70%. You know, you can be minimum 60. If you're not up to par with the level you set for yourself, then you hit your demo account for a few trades and then you just take it from there and you just continue the process. This right here is going to stop you from over trading in your live account and stop you from trading the market environment that you might not even be comfortable with and you're not admitting it to yourself because you're playing mind games. So guys, use that formula. You need to know your winning percentage. You need to know how much you win and how much you lose. What you're trying to determine is the level of performance that you need to maintain as a scalper. If you are not maintaining that level, then you should not be trading real money because you're clearly not maintaining the level required for you to be making money consistently anyways. All right, guys, that was the point of this video. Thank you very much, and I'll see you in the next one. Take care. Bye.